Welcome, everyone. You're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance, and much, much more. I'm Joe David, the founder of Nephos Group and Miner. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now on to the next episode. Hello everyone, welcome to the latest episode of the Nephology podcast. Delighted to be joined by Will today. Will, how are you?
Hello mate, yeah, I'm good, thank you. Obviously known online as CryptoinsightUK.
Yes.
But yeah, it's great to be here. We've got a lot to talk about today.
Yeah, we have. Yeah. I mean, we've had a lot of conversations over coffee where I think we've both at the end of that gone, we should definitely sit down and put this on camera because we have a lot of good, interesting conversations, and you specifically have got a lot of really good insights that I think people will be really excited to hear today.
I was going to say, I don't know if there's definitely value there, but that's up for the audience to decide.
Yeah. I mean, a lot of people follow you online, mate, so you must have some value there.
That's just entertainment, I think.
Yeah, maybe. Yeah. I mean, we were just talking about you coming in a undersized t-shirt, which you probably should have done.
Yeah, I mean, I picked my outfit for today. Not sponsored by Mantle, by the way. Picked my outfit for today and then put my t-shirt on this morning, and it's gone through the wash too many times and it shrunk a bit. No. It's like my belly button was out of that.
That would have been entertaining in some shorts and crop top for this episode. But no, so why don't you start by telling everyone who you are, a little bit about your background and what you do.
Yeah, for those who don't know me, I bracket myself as like a KOL, but I don't like that. It's just the easiest way to explain it. I'd say like I'm a crypto analyst. I also talk about macroeconomics as well, which we're going to get into a bit today. I have around 150,000 in my community across all platforms. Most interactions on Twitter. I'm posting all the time on Twitter. I'm probably posting like 10 times a day on Twitter.
And that's something that you shouted at me about earlier as well.
Imagine being in crypto and not going on Twitter every day. Like, if you find your info
come back to Twitter in a bit.
That's sickening that. I do a weekly roundup in a newsletter, which is completely free. All my content's free. Daily YouTube videos, also sometimes post short form videos on TikTok and Instagram, but I don't enjoy that as much, although that is where my roots are. But then before that, how I got into crypto, I was a competitive gamer. I went to university, came from university, started an SME, got into competitive gaming, sold up my SME, used all the capital to go all in on crypto in like 2019. But I'd already been in 2017 whilst I was working in like a cafe and a bar. All in 2019, did pretty well that cycle, and then started to create full-time content in just coming towards the end of that bull market, like 2021, and I've been making full-time content since like around crypto. But as I said, like the content isn't really my job. Like trading, analyzing is my job, and then the content is something to keep me, I don't know if sane is the right word, something to keep me in check with the markets. But
yeah, I mean, that's an interesting point, really, right? Because, when there's a lot of obviously online influencers, KOLs, all these different things. And like you say, what is the job? Because a lot of them also do other things. A lot of them do maybe just shill projects online, but also a lot of them will do other things. Like they will trade the market. They will, that's an interesting point. You don't see the online part of your day or whatever as the job or as part of what you do. You kind of class the trading and the analytics stuff that you do as your job, and this is kind of a, like you say, a fun added extra, as it were.
Yeah, well, I think it all like ties together, because I truly believe that like discipline and consistency are the things that help you achieve anything in life. And to keep me disciplined and consistent, the content is really good, because if I don't stay disciplined and consistent, you can see the reflection in terms of engagement. So I have to stay disciplined and consistent with content, which makes me stay disciplined and consistent with research and analysis. So I can't be updating people on content if I haven't done any research, because as we spoke about and we might get into later, my content is my own thoughts. Like I don't reiterate what other people say. I make my thesis based on what I've read and understand, and then I post that out. So I have to be consistent with my knowledge base expanding all the time. Otherwise, I can't create the content. So they kind of like play together in terms of like helping me to stay in that mindset.
And that's really interesting, actually, in that, because you're right, by knowing you're putting yourself online in front of millions of people that can tell you you're wrong, in a sense, means that you need to make sure that you've done enough research that you feel confident in what you're saying, right?
Definitely.
Which then in turn means you've done a lot of research and you should be able to make more informed decisions in the market and stuff like that. So that's a really interesting way to look at it, I think.
Yeah, and I think that is where, like, I'm going to say KOLs because it's such a weird term at the minute. That's where they should be trying to get to, in my opinion. Not that I'm the all-seeing eye, I don't mean that at all. But what I mean is we've gone too far down the route of like marketing. People are marketing for the sake of marketing. A lot of content creators are just polished marketers, which is great. We do need that in the space. But there should be a clear distinction between people who are like making, I'm going to say like almost UGC, like user-generated content, making content for the sake of content and reiterating what other people are saying, to people who are actually have their own opinions and like mine's not polished. Like my content's not like good content in terms of like I just literally turn my laptop on, record my screen and like post it. And I think there should be a separation between like KOLs in that sense.
I think the word KOL or the phrase KOL or whatever, the acronym, whatever you want to call it, is also, I'm not sure how true it is in a lot of senses, because the phrase is key opinion leader, right? Which doesn't necessarily suggest marketeer. You know, it doesn't necessarily suggest influencer. It suggests somebody that has a huge amount of knowledge and experience and things like that, that they are able to give very informed opinions on the market, and that's not what a lot of KOLs do. So it's another one of those things, isn't it, where the phrase or the acronym or whatever doesn't quite match the content that's going out, and there should be two, really. Yeah,
it should be like key opinion reiterator.
Key opinion bullshit or something like that.
I'm not saying that like I know everything. I don't mean that at all. I just mean that like from what I've researched and learned, like that's where my opinion comes from. It's not from, and it is obviously sometimes from what I see online, because if someone has an opinion, I'm like, oh, why do they have that opinion? And then like look into it myself.
Yeah, but you don't see an opinion and go, oh, I've seen that opinion, therefore it's right.
Yeah, or I've seen that opinion, therefore it's mine for virality reasons. So that's the difference, I think.
Yeah, no, I agree. And I think that's where we probably do need a separation of those that are there, which you are one of, to actually educate and help people and give them, you know, useful information to make their own decisions, versus somebody that's paid by a project to show the latest token, which they haven't actually done any research into, and all these sorts of things.
And that's where it's difficult though, because the more engagement you get, if you are like making money in that space, the more reinforced you are by the capital that you make, because you get more views, and then people want to work with you because you've got more views, and then you make capital from that, which incentivizes you to get more views again.
Yeah, but I don't think there's wrong with, you know, we've had this conversation, you know, I don't think there's wrong with taking money for sponsorships or kind of referral links or anything. I don't think that, you know, we take referral links for certain, we talked about it earlier, you know, we take referral links for certain people, but we don't send people there because of the referral link. We send people there anyway, and we would send them there whether there was a referral link or not. But if we're sending people there because we believe in it, what's the harm in us getting something out of that? And I think, you know, if a project paid you, for example, to research their project and give a opinion, you know, on their project and their tokenomics or whatever you want to do, you know, and post that online as an honest opinion and pay you for that, I don't see why that's a problem, if that makes sense. What's a problem in my eyes is I've launched a token this morning called JoeCoin, and I want you to post about it now because you've got 150,000 followers across all your platforms. I'll pay you 20 grand to do it. You don't even look at it. I'll write the post for you. Here's the post. You send it. That's what I think is wrong, if that makes sense. I don't think it's wrong to take money for the right reason. Does that make sense?
Yeah. I completely agree. And like even with big projects, like people reach out to us quite a lot as KOLs, like to give us an insight into what actually goes on. It's like anywhere from like big projects to small projects will reach out to you, and even the big projects, I don't think their marketing like messages are very good. The way that they reach out to you, like exactly as you said there, and I was going to name them, but I'm not going to say who it is. But recently, like someone reached out to me, and to be honest, they're a completely neutral project that I would work with, but the way that they wanted me to to help them with their branding campaign, I didn't want to do, because they literally gave me a format. I was like, I never speak like this. Like, why am I going to start doing that? And they also said, don't put that as an ad. And I was like, well, I'm not like. And they're a big company. Like, they've got like multi-millions followers. And a trusted player in the space, but I just can't work with somebody who's like trying to.
But that's, I guess, the difference, right? Is you would want to put on that, this is an ad type thing, right?
Yeah.
Or I am paid, or I am,
working with them.
Whatever the words are. And don't get me wrong, there's an element of like, people will take you more seriously if you aren't paid by somebody, right?
Yeah.
Because you have no incentive to talk about it. But on the flip side, like I say, I don't think there's an issue with, if you're doing things for the right reason, with being rewarded for that.
No, I agree, and that's where the like hard part comes in, and maybe the difference between being like a KOL and like an analyst, because like a lot of KOLs like take payment specifically for making content rather than for providing information, and I think that's not wrong, as you said. Like, they've spent a lot of time to build that channel, so they should be getting paid for the work that they've done. But I think they're different brackets. But then I also don't want to be like specifically an analyst either, because I don't have the accreditation to say like I'm an
analyst.
Yeah, I don't have a degree in like economics or anything like that. Not that I even think you need that anymore. No. Like, but that's why I wouldn't want to claim that, because a lot of people are way more qualified than me, and I'm learning as I go. So. Yeah.
And rightly or wrongly, like you say, you'll have people that have done economics degrees that have then spent time in, big banks, and
they have a much deeper understanding of everything than I do. Much deeper understanding. But like, I think I have a deeper understanding than a lot of people, and I try and tie it together, and that's where my value, I think, comes in. Because I can then project that to people who have less understanding than me, which I think is the majority of people trying to get into the space.
Yeah, I agree. So just that kind of leads us on to like the analyst kind of part of your job, if you like. But what I like about a lot of your content is you actually relate it, not just the crypto market, you then relate it back to the kind of wider economic backdrop or what have you, right? And we joked about it earlier, like, I never used to be interested in what the Fed were doing, and now I seem to be interested and see
got
it
Jerome Powell on speed dial.
Yeah, exactly. Yeah. As a favourite on my YouTube or whatever that I get to see his updates. At what point did you become interested in, like, what point did you realise that the economic factors of, I know it sounds obvious, right? But what point did that click in your head that actually, if I'm going to be successful in crypto, I need to know a lot more about the wider, economic market and things?
I think there was a mix of things. Like, when I started to understand that there is a cycle in crypto, I started to look into why that might be, and then obviously there's a lot of different arguments you can make, especially the main rhetoric is around the halving of Bitcoin. And like, maybe it is and maybe it's not. But then when you look a bit deeper, maybe it's around the business cycle and the refinancing of debt around the world. Maybe it is again, maybe it's not. But those rabbit holes were the ones that made me interested in like wider macro. At the same sort of time, like, obviously I spoke to Raoul Powell, had him on a podcast published for his Global Macro Investor. So those things all came together at the same sort of time. And then as speaking to people like that, like, opened some doors for me, and I started to think, okay, well, you're clearly successful in the traditional financial world, and your opinion is that macro and crypto align. So me just being like someone who's new to the space, I need to be, if I'm not at least taking your opinion into consideration, then I'm doing something wrong. Yeah. So that's when I started to really like research out. So I'd say like, well, I also experienced a cyclicality, like I said, and I thought, why is that? So like in the 2017 cycle, I watched my bags, like, say I put a few $1,000s in 2017, and I watched them go up to like, say, like low 5 figures. And then I was like, okay. And then they went all the way back down to like, say, mid to low 4 figures, but I only put like, say, 1 or 2K in to start with. And I was like, well, why is that? And then when I saw the cycle like start again, that all those things all played in together, and that's how like I got into understanding that there's a lot of like dynamics at play here, not just like what meets the eye, I guess.
Yeah, no, it makes sense. And how much now would you say is like, when you're researching token, the market, whatever, how much do you think is you're researching the crypto element, and how much do you think is the macro? Just as a rough, like,
I'd say like 80% macro.
Yeah, interesting.
80% macro, because I think one of the things I always say to people is like, if you want to invest into crypto, is like learn about Bitcoin.
Yeah.
Like the first thing I say is learn about Bitcoin. And I personally at the minute don't hold any Bitcoin, to be completely transparent.
Okay.
But Bitcoin is the foundational layer that a lot of crypto assets either follow pretty much the same as what Bitcoin does. Well, not many are like proof of work anymore, but like the way that like transactions are settled and understanding how blocks are made, these sorts of things, all the rest of crypto is like some sort of derivative of that, like in one way or another, or at least along the same line, being in the blockchain. So understanding that then gives you a base, and then if you understand like a few other different like ways to find consensus, say proof of stake or like how validators work or whatever, you'll see that recurring theme across most cryptos. So then once you've learned those fundamentals, everything else is pretty much either an L2 or some tiny derivative of that. So what you really need, if you're trying to make money in the space rather than be a developer, you need to be learning about where money is, like what influences the money that moves around, in my opinion. So that's why.
No, that's true. Yeah, that's true. And so I guess, do you think most people, or do you think, I'm talking about people maybe that aren't in crypto that much at the moment, do you think they realize that actually, in your opinion here, that maybe only 20% of their decision-making process is actually on the crypto? Do you know what I mean? Do you think people think that actually, oh my God, I don't know 70% about crypto, for example.
Yeah.
Therefore, I can't invest in it. Whereas actually, if they were very good at the kind of macro side, actually, maybe they could make some very good investment decisions in crypto.
Yeah, I actually say to everybody that I know, including friends, even my partner at the minute, it's like, look, if you're looking for any sort of job or anything like that, it's just looking Web3, and it's not like specifically because of the reasons you've talked about, but it's just because the industry as a whole is more broad based than you think it is, and is going to have more intersections with general life than people can even imagine in the next 10 years, in my opinion. So like, yeah, if you're interested in macro, you've probably got an understanding of like the crypto, or you can easily put the correlations together that Bitcoin reacts to liquidity and maybe the business cycle. So if you can see that and you want a high vol asset, then add it as a percentage of your portfolio. It's a no-brainer.
Yeah. It's amazing how many people still are in the kind of, let's call it traditional space, and still don't have any interest.
Yeah, and I mean, I get that side of it too, because what's the famous saying? It's like, only invest in something you understand.
True.
So if you don't understand it, then I could see why you wouldn't want to part with capital, especially if you've worked hard to create the capital that you've got. But the counter argument to that is, you can see just statistically that it's about one of the only things that have outperformed like debasement of currency, that and the NASDAQ. So if you have a mathematical brain, let's say like you think that only 5% of your portfolio is good for like crypto because you're only willing to lose 5%. Well, there's more than a 5% chance that like crypto is going to play a big role in our future. So you should be allocating at least 5% along those sorts of lines. Like, and that's the way that I try and explain it to everybody. I was like, look, the younger you are, in my opinion, obviously no financial advice here, the more of your portfolio you should allocate to crypto, because everything else is debasing against like fiat currency. So like, well, more money's being printed. So as more money gets printed, money becomes less worthy, like less worth. And as that happens, you need something that's going to counterbalance that. And crypto is about the only thing. Like, people say, oh, property, I'm getting more wealthy in property, but you're not. Actually, realistically, property is just going up almost in relation to what central bank balance sheets are expanding by. So you need something that's outpacing the rate of debasement. And at the minute, we've only got crypto, and tech stocks are doing it. And I think that in the future, we'll probably see things like AI, biosciences, stuff like this, that will probably have periods of outperformance, but they're pretty hard to invest into. Whereas crypto, all you have to do is buy, even just Bitcoin, just buy Bitcoin and bang it in a hardware wallet, add to it over time, and you will outperform debasement. Or so history says, and so it has been since 2017, since I started to get in. And at any point, pretty much, in fact, statistically, at any point, if you bought like after 2017, you'd be up on your investment right now, pretty much. So yes, there's volatility. So don't just go balls deep straight away. But as if you add in over time, you will outperform debasement of currency, and you're also going to outperform like the S&P, for example, which is where most people advise you to put capital. And yes, the S&P is more proven. Things like gold are a better store of wealth because they have the history element behind them. But if you want to outperform, which is what young people want to do more because we're trying to build wealth.
Yep.
Crypto is the only space that we can do that right now.
Yeah, and I couldn't agree more. And I think I said to you last time we spoke, like I put a small amount of money every month into each of my children's kind of savings, if you like, and I was putting it into a pretty much a global tech fund, basically, like in the traditional market, right? Just to get as much, like you say, to get as far on the risk spectrum in terms of traditional markets that I kind of could with a simple kind of online thing, right? And then I was like, why am I doing that? Why am I not putting this in Bitcoin? And I'm not going to play with their money and start going in, some real low caps and hope for, the best. I'm literally putting the same amount of money I was putting in the traditional market. I'm now putting that in Bitcoin for both each, the same amount each. And my view is exactly the same as yours, that over there, I mean, they're 6 and 9 right now. So, if let's say take till they're 18, that is going to, there's, in my opinion, there's no way Bitcoin doesn't outperform.
Yeah, and there's broad risk associated with it. Look,
of course,
because anything can happen.
Absolutely.
However, the risk to reward to the upside is bigger than what you're going to get in equities.
Yeah.
There's downside risk across our whole economy probably for the next 20 years, because if you look at history and cyclicality of economies, we probably are due a correction in something, either whether it's fiat currency, reserve currencies go bust every 75 to 125 years, and the US have been there for that long. We've pretty much been in a bull market since 08 because of how equities are reacting to, as we talked about, like monetary debasement. So at some point in the next 20 years, unless we have a golden age and something can take it out of this, and obviously there's debt problems all around the world, unless we have a golden age with AI or something like that, there's going to be a major correction. But is that correction going to be just equity based, fiat currency based, or is it going to engulf everything? I don't know. And look, the global powers are starting to get angry with each other. So there's always risk, because that's the point I'm making. And so at the minute, I think it's very difficult to have a really well-structured portfolio. And the thing that I'm going to bring it back to what you were saying about what you're investing for your children, but the thing that I find difficult is I would like to take some profits this cycle.
Yeah.
And I will take profits pretty heavily. But where I put my capital then, I flip-flop all the time. And I'll probably get a couple of properties because bricks and mortar aren't going to go anywhere, even if they depreciate in value.
Yeah.
But I'm never going to make the potential upside gain that you would make if you're investing for your children. But then also the downside gain is just as high, because if we have that sort of collapse, and I don't want to be the person coming on here to advocate for that, because everyone who tried to prep for a collapse always gets wrecked.
Yeah.
So I'm not that guy, but I am aware that is a possibility.
And I should probably clarify that I'm not necessarily saying that for the next 10 years, 12 years, 13 years, whatever, the only thing I'm going to buy for my kids' future is Bitcoin. I'm not necessarily saying that, but for the last 5-6 years, I've been investing in the traditional market. So they've built a bit of I'm now I actually now want something, like we were talking about the portfolio position, if you like, and I'm being very sophisticated for an unsophisticated situation for me. But, now I feel it is the right time to add more and more Bitcoin to that. And then, it might be in 2 years' time, it might be in 3 years' time, it might be in 18 months. I don't know. I might actually then go, well, do you know what? Now actually is a good time for me to flip that back into some traditional markets, or, whatever it may be, So, and I've got property I own myself, so that is then in my estate, if you like, for the kids. And so it's more than just I'm sticking all my money in Bitcoin. But I think for me, it was that realization of what am I trying to achieve for them? Yeah. And if I want to achieve a point in 10 years time or whatever, that the money has grown exponentially, I feel at the moment the best bet for that is Bitcoin.
Yeah.
Do you see what I mean?
Yeah, I think that's a fair thought. And one thing that I think about, and an easy way to explain to a lot of people is, and you were talking about balancing a portfolio, almost saying that you'd sell it if it went up, maybe, or you'd I don't know, or you'd allocate somewhere else. And one thing I say to a lot of people is, if there's a time where you can get a lot of Bitcoin for dollars, then buy Bitcoin. And then if there's a time you can get a lot of dollars for Bitcoin, then probably sell some Bitcoin.
Yeah, no, that makes sense. Yeah,
that's an easy way to break it down, because a lot of people get caught up with but it could go higher, and it probably will. Yeah. Realistically, exactly like you say, over the next 12, 13 years, my bet would be that Bitcoin's substantially higher than it is now.
Yeah.
But if there's a period, not specifically for you when you're investing for your children, because that's almost not going to say no risk, but it's low risk, because you can just keep dollar cost averaging even if the price comes down.
Exactly.
But if you're managing your own portfolio and there's a period where your crypto's gone up a lot in value, that's basically what I'm saying. When you get a lot of dollars for what you've put in, take some dollars, and then because there will be a period where you're gonna get a lot of Bitcoin for dollars, meaning the price of Bitcoin is going to have come down.
Absolutely.
And that's broad based across crypto, not just Bitcoin. Like I use Bitcoin as
but it's also broad based across all markets.
Yeah.
Markets change in value over time. They go up, they go down. That's how markets work. And I think, you're right. It's a bit like property, as we mentioned. If you bought property 10 years ago, let's say in Dubai, where we are now, you would have made exponentially more money than if you bought property in the UK 10 years ago, right? Certain things. But that doesn't necessarily mean that everyone should have bought Dubai property 10 years ago and no one should have bought UK property, or doesn't even mean that anyone should. It's just the fact of the matter is that the risk reward on some of these things is significantly higher on Bitcoin maybe 10 years ago on Dubai property or whatever you may be. And if you're one of these people that wants to grow your wealth more exponentially than others, in my opinion, you can't just stick it in a few tech stocks and hope for the best.
Yeah, definitely. I think that's quite a good segment to bring us into, talking about Dubai and where we are right now.
Yeah. I mean, when did you move here?
About 2 years ago now.
Oh, we're similar sort of time.
Yeah, I think July.
Yeah, same time then.
Of 23, maybe.
Yeah, same time. Yeah. What made you make the move?
To be absolutely honest, I like to travel. I've been traveling a lot, and I was going to go traveling again. And I just met my girlfriend, and I said to her, "Look, I'm going to go traveling," but she's a teacher. I'm going to go abroad. I don't like living in the UK anymore. It's not for me right now. Unless, at least, if you want to come, then you need to apply for some jobs. And if you don't, then that's fine. I understand. So she applied to a few different places and got accepted to Milan, Cayman Isles, and here.
Oh, right.
We obviously looked for places that were more tax friendly as well because of the what I'm into. We said instantly no to Milan basically, and then we just tossed up between the Cayman Isles and here, and decided that here, at least for the short term, would be a better option for us as a young couple. And then we haven't looked back since. We said we'd do a year or 2 years, and now we've just signed for our 3rd year. So
yeah.
But
do you see yourself moving?
What, permanently?
Yeah.
Don't know. There's pros and cons to Dubai. I actually love most of the pros, as in safe, low to zero tax. Lifestyle is whatever you want it to be.
I was literally just going to say that. That's exactly how I call it.
Yeah.
Lifestyle is what you want it to be.
You can find whatever you'd like here, pretty much, aside from real nature, which I find it may be the location that we live in right now, but if you have wealth of any kind, you can live a really good life here.
Yeah.
Which I think is very attractive to a lot of people, especially after you have the go from the UK contrast to here. But one thing I do miss is just being able to go for a walk out of my flat. It's not that easy to do that. It gets really hot in the summer. There are some negatives, but as I said, if you balance them up with the extra income that you'll make from for tax reasons, you can go away for a few months of the summer and go somewhere where it's not as hot, and still come back and still be better off.
And I think it's people always talk to me about Dubai and would I recommend it, and I'm it's very hard to say would I recommend it or not, right? Because what I want and what you want, person, may be very different, right? If you're moving to this is what frustrates me when people say, well, there's no nature. I'm you're moving to a desert. What did you expect? You can't move to a desert and expect there to be green trees and blah, 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 because that's not reality, right? This is a place there was nothing here apart from sand, right? So you have to look at these things and go, if I want to be able to walk around a forest, on a Saturday morning, that's not here. So don't move here if that's the thing that and that's why I get frustrated with the, not with you mentioning the nature, but in general, when people go, I could never live there because there's no nature. Okay, great, Like,
Yeah,
you know, I have no
definitely.
problem with that.
Yeah,
Like, you know, do I miss nature? Yeah, of course I do. Like, it's nice in the UK when, you know, it's a nice sunny summer's morning and you can go outside to the park and blah, blah, blah. Like, of course I miss that. But there's an odd thing of that. And then there's this huge,
Yeah,
you know,
definitely.
other piece. And I think for me with Dubai, it's like you say, everything here is nice, as in like you're looked after. Like the services. I took an office, and the company that own it, they're actually a Hong Kong based company, but they've got local kind of ownership in this region. And it is even the office space is the environment is just amazing. You go to WeWork, it's got an American culture. It's just very different, right? You go to this one, and it's got that Arabic culture. It's got that kind of Middle Eastern culture where it's very much like, you know, do you know what I'm trying to say? Like the vibe is just very different.
Definitely.
So I think, yeah, like you said, there are going to be people that want to move here that don't want to move here for reasons that they do and don't want to move for, and that's totally fine. So it's never for me to say you should move here, but in my opinion, I've got zero interest in going back to the UK.
Yeah, definitely. So speaking about like moving to Dubai, what reasons would you say that people should come? And we're going to talk about like tax and stuff here. What sort of income do you think someone should be earning if they were going to be coming here, and like how would they actually get around this process? I get asked quite a lot online. Oh, how are you making you move to Dubai? Like, what do you do? What do you need to do? And I know that you specialize in things like this. So what would you say to those people?
Yeah, I mean, firstly, talk to us. Because you know, I know, I don't mean that completely as a shameless plug, but you know, I've actually experienced it. You know, this is not a big corporate firm that has no soul or no personality. Like, I've moved my family halfway around the world. You know, I've seen my kids struggle to settle in at a new school. You know, all those sorts of things, right? So I've seen firsthand how the challenge can be, and I have that conversation sometimes. Sorry, I'm going slightly off topic here, but I have those conversations sometimes where people say to me, "I would come, but I've got 2 kids in school," and I'm like, that doesn't necessarily mean you can't, right? I've done it. And then they go, oh, interesting. I didn't realize how was that? How did you manage, you know, blah, 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 blah. So, look, I think for me, from a tax perspective, you know, and obviously all these things are specific to individual circumstances. But for me, I think if you are in the higher rate tax bracket in the UK in some way, shape or form, like either that's your salary, so that's around the 55K mark. If you're in that bracket, either with your salary or other income, and then you hold other assets, crypto, you know, things like that, then I think at that point, from a tax perspective, it's very likely that you're going to see a significant upside by being in Dubai. But, you know, the other thing I get asked a lot is, can I just move? Can I set up my business here but not move here? And it's like, it's not as simple as that. Like, if you want to come here and benefit from all these different bits and pieces, you need to really up sticks and move, right? That's how you're going to get the most benefit. And so I think if you're a higher rate taxpayer and you've got assets, especially something like crypto, which you're probably holding because you expect a fairly decent upside on it, then you need to consider that that position that you have from a tax perspective.
Yeah, and it's not an easy move.
No.
Like, I think a lot of people say, oh yeah, it's super simple, downplaying it. It's not easy. And so that's why we're having this discussion and why I wanted to come and talk to you guys, because from experience, if you have people who are already there that you can communicate with, like, it is probably going to cost you a little bit of money, but it's worth it, because you're going to probably pay that anyway. Like, I got stung in my first year here. Just like, not specifically got stung, but just like didn't really know what I was doing and tried to save money, and then ended up costing myself more money, and needed your experience to help me. Like, even with like, one thing you'll find making that move is that a lot of people, as they do in the UK, just are here to try and extract value from you. So if you don't have people you can trust and can speak to, then that's very difficult. So that's why, like, I came to speak to you, because I wanted to have a conversation with just someone that I knew wasn't going to try and rip me off.
And you know, and I appreciate that, thank you. And it's like, you know, that's the really interesting thing, right? You know, the UK, yes, there are obviously people that want to rip you off, and there are people, but actually in the UK, in the main, we trust the service providers that they are delivering the right solution or the right answers based on the facts that we've given them, right? I know you've had some issues in the past in the UK as well, but like, I find rarely in the UK do people come to me and go, they just didn't have a clue, right? Most people, if you train to be an accountant in the UK and you run a business or you're a qualified, like most people know what they're talking about in the main, right? And you kind of, most people will trust the opinion, whereas here, the professional services market here is mental.
I agree.
It's just mental, and like I find it very difficult sometimes as a business that operates as professionally as we can.
Yeah.
To then talk to people when they've spoken to somebody that just doesn't have a clue.
Yeah.
And even last night, I was chatting to a guy. He has a firm that he's been working with. I met him. Someone told him that he needed to speak to me. Had a coffee with him a few weeks ago. And he messaged me last night and he was like, I've had this message from my corporate services provider / accountant. Because that's the other thing here. A lot of these corporate services providers also offer accounting. When I think it should be the other way around. An accountant offering corporate services is one thing, right? If I set you up a company because I've thought about the tax planning and how that looks, right? Great. But if I just set you up a company and then I put the tax as a second piece, that's never going to work. So anyway, so he just got this really confusing message. The facts that they were giving him were correct, but the way they delivered it made absolutely no sense whatsoever. And so he was just totally confused, panicking, blah, 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 blah. Sent me a voice note. I sent him a voice note back in like 40 seconds, as in like the recording of it. And he was like, exactly what I needed to know. Thanks so much.
Yeah.
Like, and that's where the mindset, from us, I always say as well that, we come from a fairly heavy taxed market. So we understand tax. We understand the ins and outs of how tax can work and where it can't work and issues you may have and stuff like that. If you've grown up here, for example, or you've worked here for the last 15 years, and you've never really interacted with tax, I can also understand why it may also confuse you a little bit.
Definitely.
Do you know what I mean? Because you haven't
it confuses me a lot, and I've grown up with it.
Yeah, exactly. So I don't blame it a lot of the time, but I think they also need to be honest with themselves, these providers, that maybe they should bring in the expertise.
Definitely. I think that's where you guys are like pretty good, because like you talked about my experiences in the UK with accountants, and it's not that they were necessarily wrong, but they didn't work in my best interest. And I think that's something that's important as well. Like when you want to work with somebody, if you're going to work within the best interest of each other, rather than like, I don't want to say the letter of the law, because I don't mean that. Like, but what I mean is like, if I can maximize the amount of capital that I can make, or then why would I not do that?
And I think, we talked about it before we started recording. Look, we're never going to do anything illegal, obviously, right? I don't want to risk my life and my job for, a quick win here, right? We're never going to do that. But what I spoke to you about before we started recording was, I'm just a normal human being like you are, right? So why would I not want to help you achieve the same thing that I would want to achieve? Why would I want to, sit in my job and, kind of not give you the right advice, but do you know what I mean? Not work in your best interest. Because if I was in your shoes, that's what I would want. Yeah. So why would I not deliver that? Do you know what I mean? And I think, that's where, and this is an unfair statement, but like, like a traffic warden or whatever, right? I always think to myself, why would you ever wake up in the morning and think, I want to be a traffic warden? Like,
people might like it.
But like, I'm just giving you my opinion here. Like, because every day you've got to go around and really you're kind of finding reasons to find someone. Yeah. Why, like, surely you've parked in a car park once and accidentally put your tyre just over a lot. I'm talking more about the UK here. Do you know, like, and I think that's the challenge for me, is when you're in a role where you are in that role, for example, in my opinion, you're supposed to be stopping people doing the wrong thing, but actually you end up finding fault to find someone.
That's exactly the right way to put it.
And I think that's the reason I'm trying to say here in terms of accounting and tax and advice and stuff like that, is that it's about putting yourself in that person's shoes and delivering what you would want if you were them, if that makes sense.
And I also think like that's exactly the right point, but then also a lot of like accountants, for example, will put an extra fee or put fees on things just for the sake of having a fee. They'll be like, this, like, you'll be like, I need some advice on this, blah blah blah. They'll be like, this is the fee that it is, and it might be like a 2-minute job, and that's exactly what we talked about. Like whatever we sorted out recently took you like 20 seconds. Someone was trying to charge me like 5,000 dirhams, like 1.2k pounds-ish for that. Yeah. And it's just like,
and I said to you, didn't I? I was like, given this circumstance, we'd probably charge this. Yeah. But let's meet up and have a look at it. Yeah. We met up and have a look at it, and I was like, a few buttons.
Yeah, and that's what I mean. It's like, obviously there should be a fee attached to that, but it wouldn't be the fee that like you're getting generically charged. And that's what I was trying to say about the difference between like your company and other people that I've worked with in the past. It's like not just going to charge you for the sake of charging you.
No.
And that's when you were saying about like you give a free consultation for anyone who wants to try and move over here. So I think that that's an important thing for people to remember as well.
Yeah, we do. Yeah, because again, it's a very big personal decision. We've already mentioned how it's not easy.
Yeah,
there's a lot to consider, and that's why a lot of the time I am more than happy to jump on a call with someone and talk it through myself because I've done it. Yeah. I can tell them exactly what I've done and exactly the things that went well. And again, I will say to them, look, this is my opinion.
Yeah.
But these are I've got a mate here at the moment. He's in crypto. He's moving over here. And he's been like, what do you think of this area? What do you think of that area? And I've been like giving him, I wouldn't move there for this reason. Not because it's bad, but for me, I want to be here. Or, my missus doesn't want to do a school run anymore. She's like, I've done a school run. I just want to be able to literally walk the kids, 5 minutes down the road and send them to school. So we're going to always live, or at the moment anyway, in an area that's walking distance to school.
Yeah.
Other people might go, I want to live by the beach.
Yeah.
And I'm happy to drive half an hour every morning to school. Okay, cool. So it's all those little things that I think we're so lucky here that you can literally live anywhere. And by that, I mean, you can live on the beach. You can live in a skyscraper in the city. You can live in a nice, small, quiet community.
Yeah, definitely.
You can literally live in any of these. So, I think it's all, it's such a personal experience when you leave a country to move somewhere else that I just don't think it's right to kind of commoditize that,
Yeah, no, I agree.
And that, that's the other thing. Sorry, I'm rambling here, but like we do corporate services, right? So we set up businesses for people, but we don't go to market and go, anyone that wants to move to Dubai, we'll set your company up for you, because that's not the market we're trying to reach. If people make the decision they want to move, then we want to help them deliver that. But we're not going to go to market and go, we want to do 100, 200, 300 licenses this month. And I say that to the free zones that we talk to, because they're like, how many licenses are you going to give me? I'm like, I've no idea.
Yeah.
Might be one. Might be 100. I have no idea. It depends on, the scenario.
Definitely, and I think that's what people need.
Yeah.
It's more like a personalised touch.
100%. And carrying on, I guess, the conversation around this part of the world, if you're in crypto as well, I think this is a place to be, right? Like licensing is amazing. I talked to you earlier about Abu Dhabi, and they're licensing a lot of crypto foundations now. So if you're, I'm not Ethereum. I'm using an example, not as an actual thing, but if you're the Ethereum Foundation, for example, you may be set up in a offshore jurisdiction because of the regulatory position. You might now be able to choose and look at, say, Abu Dhabi as an option to set up your foundation, which I think is important for a lot of people when you're trying to build trust. And
definitely. I think like what you were just touching on there is like we've been in this environment where it's not that it's been wrong, it's just not been right to do anything within crypto. So the only real access that people have had is like Cayman Isles, Seychelles, Bahamas, like these sorts of places, which are like, well, they're like free from like regulatory capture, really. And then, but if you want to be taken as a serious player especially in the traditional financial markets, you need some more substance behind your company. Yeah. And the UAE, well, America are like making it more vocal.
I was just going to say that actually. I think the US are going to.
I think they are, but I think the UAE are faster to implement. It's like when you have a large corporation. If you have a large corporation that needs to make a decision, it has to go down the chain of command. But if you've got a smaller corporation, which is what I would call Dubai, they can get things actions pretty quickly, and we've seen that recently with like investments into Binance, $2 billion from what was it, AGX? Was it?
Yeah, I think that's the name. Yeah. They're like part of the ruling family.
Yeah, the sovereign wealth fund. Yeah, and they invest into Dubai. But then we also into Binance. We also saw like Vara give Ripple full crypto payments license, and people are saying, "Oh, but this was news from last year," and it wasn't, because what they gave Ripple last year was payments license in general for traditional finance, and now they've given Ripple crypto payments license as well, so now they can pay cross-border or do banking services with crypto specifically. And I think that this is a trend that's just going to accelerate in the UAE. You're seeing like partnerships with Crypto.com, OKX, like all these sorts of things are really like coming into fruition quickly. I think America are being the most vocal about it, and the changes that are made in the US will echo across the whole of the world, realistically. But Dubai and the UAE are implementing like faster than the US even can, because they have to go down less different orders of demand.
Yeah, I mean, the words Trump used, I think, the other day, and I'm not quoting him specifically here because I'll get it wrong, but like the words he used the other day was that the Treasury needs to look at introducing a stablecoin bill.
Yeah.
In other words, that's the guy that's in charge of the country is saying that a department needs to look into how they do it.
Yeah.
Right. So, and my point by saying that is, as the president, he is not really in a position to go, we're introducing a stablecoin bill tomorrow. Do you know what I mean? Because that's not how the constitution of the US works, and same in the UK and places like that. Whereas here, if they've got the right framework to do, they can do it tomorrow.
Yeah, they can just
and that is, I think, like you say, I think for me, the US are going to be, how like you've got a race going on and you've got some cars that are quite far ahead, and then these guys are going to get a super booster on and they are going to catch up, I think, the way that they're going at the moment.
Well, yeah, because even if they just get some sort of regulation in place, they've got all the capital there.
Yeah.
Like everyone, like the US is the powerhouse in the financial world. Like they have all the financial capital, all the intellectual capital, all of it, realistically not all of it, but like a large percentage. So as soon as they get some fair regulation in place, even if they just get 10-20% of their market share that's already in traditional finance, start to transition over to crypto, it's probably more wealth than most countries have.
And I think the other thing is companies want to be there. Like I talk to a lot of companies that would much rather, that's unfair, but they would love to be in the US market because the market is so big.
Yeah, the wealth generation opportunity is so huge.
So they want to be there. Yeah. So as soon as those regulations come through, or there's a glimmer, and I don't even think it needs to be full. I still think places like the UAE will be much, much better if you are, I don't know, a crypto exchange and you want to offer a full suite of regulated products. I still think the UAE will be better even in the next 4 or 5 years than the US for that. Yeah. And that's my opinion. But I think even if the US just opened the door, it will flood. Do you know what I mean?
Yeah,
because there'll be the opportunity. Some people will go, I don't need a full license. I only need this license. Yeah. And so I'm willing to go and get this license here because that's going to open up such a huge market. And I'll have my full license in the UAE, for example.
And like it's interesting that like the UAE and the US are like, I've done a deal recently, like 1.4 trillion into the US over the next 4 or 5 years or something, which makes me think that they're going to start to align or accept like things from this jurisdiction. So say if you're registered here, you would have thought there's going to be some sort of crossover with
like
the US.
Passport type thing.
Yeah, maybe travel, but also I mean like maybe more like business.
There's financial passports. So if you've got a license here, there'll be elements of that license that are accepted in the US.
And it's probably like, instead of being like 10 hurdles to jump, it might be 3 or 4.
To
be able to register.
Well, they had when they announced that, they also had David Sachs here, didn't they? The crypto czar for the US. He was here, talking to the UAE government. And there's no way that he's not talking about. So what have you guys done with Vara here? What have you done with ADGM here? Like, what are you guys like? They're talking about that.
Yeah, and I think that is showing us what is to come in the world in general. Like, yes, the US are the big name in the room, but everywhere else is following suit, or in Dubai's case, in front of the US, but they're still having the conversation, and everyone else in the world can see that what's going on. Like we're seeing, I even saw this week that there was a Hong Kong ETF issuer that said he's been in discussion with people in mainland China. They're not specifically changing their policy yet, but they're having the discussion around it. And I think it's a race to accumulate. It's going to be a race for accumulation at some point, and it's also a race to, like, I call it a race to the bottom in terms of regulation, because otherwise you're pricing people out of your market. Like, why would you not, especially as like developing economies? So anywhere in Asia, whoever has the best rules in terms of regulation
are going to market share.
Exactly. You're going to see an influx of people who have US dollar-based assets move into your jurisdiction.
And it's a little bit like the Middle East. If the UAE can push itself much further forward than, let's say, a Saudi or a Qatar or Bahrain, whatever, then people are going to go, oh great, so if I want to set up in the Middle East, then the UAE is the best place. Definitely. Or I think in the way that, and this is my opinion before I get slated for this, but I think what's going to lag behind all of this is the EU and the UK. Yeah. Because if you look at MiCA, it's a corporate bullshit licensing regime in reality, and I'll get a stick for saying that, but like it's not built for crypto businesses in reality, right? Yeah. And I think they are going to find it very difficult, given their policy decisions that they're making, to really make inroads when the likes of the US, the likes of China, Hong Kong, UAE, I just think they're going to really struggle.
Well, I just think what's clear is that in the East, and obviously including the Middle East here and Asia, they're forward looking with policy, and in the West we're looking backwards. And they're here, they're focused on growth. They're trying to inverted commas catch up with the West, and the West are just stagnant. So they're definitely going to catch up if they haven't already overtaken in a lot of ways. And I think that's the issue that we've got in the West, is that we think we're like superior. And we're not.
No.
We like a lot of people who are like from the UK who haven't been to Dubai see Dubai as this like specific place they can't go to. I'm using Dubai as this example, but I'm going to use it. I'm relating it to regulation. They look at Dubai and they think like, oh, I don't want to go there because this, and this. And then realistically, they just haven't seen what's going on in Dubai. And that's what regulators are like as well. Regulators are like, oh yeah, like we're this brilliant place, but then if you compare the UK in general to what's going on in Dubai, it's not even on the same scale.
No, like you say, it's not even in the same world. You know what I mean? Like, they're just so far apart. And I think the issue that the EU now have is that because they've brought Mika out in the way that they've brought it out, which for a lot of people, by the way, they'll like. A lot of people will like the rules that Mika have brought out, especially if you are in that more maybe traditional finance world and you're looking at bridging your business into crypto. And I think actually a lot of people will like what Mika have done. So I don't want to completely slate it. But if you want to really drive innovation forward and you want to bring the most innovative, the most forward-thinking businesses, I don't think that Mika and the fact that UK have nothing really encourages that, whereas I do think the Middle East and Asia and I think the US as well will encourage those sort of things. And I think the worry now is because they've come out in this kind of big corporate kind of position, it's going to be very difficult to change that dramatically. Do you see what I mean?
Yeah.
And that's where I see the issue with them.
The one that frustrates me is the UK, because we're like a standalone regulatory system and we have nothing. Like why? Like even... I'm not going to get into politics. It just winds me up. There's not even any point in talking about it. But Starmer even made a point of saying like, "Oh, we want to be like a leader in AI." Why the hell would any AI company go to the US? To the UK, sorry. There's no reason why they would. There's nothing. There's not even a regulatory framework around it. Let alone they like have to pay more taxes pretty much than anywhere else in the world, I guess, at the minute, even probably more than the US, because the US are now becoming people who are going to embrace that. So why would anyone go to the UK?
And also the market. The market is small because you are now really looking at, if you get a license in the UK, for example, you are really only looking at the UK. You can't even passport that across Europe now in a lot of instances. So actually, what are you benefiting by going to the UK? There are certain industries, insurance, and I do think, banking and finance still has a big hub in London and stuff like that. But in reality, like you said, there's no, I know, you and I could sit here all day and talk about that as well, but that's my worry for that part of the world, is that it's not got any real. If you're like, I know OKX recently got a Mika license, and if you're a big exchange that wants to serve the masses, you're going to go, and you've gone through regulation in all these different places, you're going to do Mika. Because why wouldn't you? Because you want to serve that market. But if you're a small, innovative business that wants to grow, why would you go there and pay all that effort to license that?
The regulatory headache,
so I think it works if you're big and clunky and you want it to work, but it doesn't work if you're small and innovative, in my opinion. So, look, we're talking about a significant amount of topics here, but I kind of want to just not close, but close in a sec, but also kind of just get your, I guess, like broader where you see the market. Like I said to you earlier, we've got to be a little bit careful on the timing here because we're recording on a day and it'll go out a few weeks or whatever later. So I don't want to go specifics on X price versus this price, but where do you see? I mean, we're recording last week of March, effectively, right? So where do you see this market now?
Yeah, like it's a really difficult one in the short term. And when I say short term, I mean like the next 3 months, because we've got a lot of turbulence in the macro world, from like Trump tariffs all the way through to like inflation/interest rates in the US, which obviously closely align with each other, to conflicts around the world, like the Israel-Hamas like conflict has rekindled this week. We've got, which is not necessarily a negative in this next term that I'm going to make, there are the peace talks between Russia and Ukraine. Like all these things are like, the way that I'd say is like they're not bubbling, and like some might pop off and some might not. So in the short term, there's definitely some turbulence. I'm not saying that's going to be negative either, because crypto specifically is forward looking. We've seen like a drop in the DXY. Normally the DXY leads crypto by about 10 weeks.
Just explain what that is.
Either way. So DXY is like, it's like a basket of currencies measured against the dollar to show what dollar strength is. And normally if the dollar strength weakens, there is an inverse correlation to crypto. Meaning, so if the dollar becomes weaker, crypto becomes stronger. But it's normally about an 8 to 10 week lag. And that puts us to about the 7th of April. We wrote about this in my newsletter this week, last Saturday, that was published. I said, look, if we go by the book and you want it to be 9 weeks, it's April the 7th. So by April the 7th, we might see the forward-looking liquidity provision start to hit crypto. And if that is the case, then crypto might perform well. We might have seen the bottom. However, if it's not, we could still come back. And that's why the macro is like interesting for crypto. However, if we look further past this, if we look into 3, 6, 9, 12 months, with what's happening around the world in terms of the US regulation, what's happening here that we've discussed today, I think that we're going to go significantly higher. I think that one of the things underpinning that could be stablecoin regulation. I made a whole video about this yesterday.
Yeah, we haven't had a chance to go into it.
Yeah, I know. I'll just try and just summarize it all quickly. Essentially, I think a lot of stablecoins are going to be produced because people need to buy US debt. And if a lot of stablecoins are produced, that increases liquidity in the crypto market. And with increased liquidity in the crypto market, crypto is something that benefits from that, as in the assets itself, because people have to use those. So like, I'll be looking at DeFi, I'll be looking at Bitcoin, I'll be looking at cross-chain bridges because people want to access the stable coins. I'll be looking at anything that's doing like real-world asset tokenization, and any fast way to move money around, because I think all those things are going to be things that benefit in the next 6 to 12 months in crypto.
Yeah, no. I think even this morning we mentioned earlier about Fidelity talking about launching that. And why would organisations like that even consider that? If
World Liberty Financial, which is Trump's
USD1, is it?
Yeah. They're also launching everyone's launching stable coins. And stable coins are fantastic because they do two things, like Scott Bessent talked about in the White House. They're going to keep the dollar as the world reserve currency, so they're very backed by the US, but they also back the stablecoin with either cash equivalent or US debt, which is like short-term treasuries. And the US needs someone to buy that debt. So I think there's going to be so many stablecoins minted. So let's say they have like $8 trillion worth of stablecoins minted over the next 4 to 5 years. That is going to have a positive correlation with asset prices because it's just minted on the blockchain. And if it's on the blockchain, then what's it doing? It's not going to sit there as a dollar on the blockchain. It's going to be utilized within some ecosystem and passed around, like as in bought into Bitcoin, maybe then sold. It'll still have cyclicality. In my opinion, it might dampen, but it's the more that is on chain, like in TVL, total value locked, the more that are minted, the higher the price of crypto over time.
100%. And just to like kind of finish on that, we're setting up a business for a client over here at the moment who's in the UK at the moment. They're trying to send me funds from HSBC, and it is the most painful process. Then last night he was like, the funds have been released. Have you got them? I mean, I might have them today, but like I've got to wait and see. Who knows?
Yeah, it's
like,
a joke.
The concept of that when we've got stable coins, just as a payment methodology for the moment, that he could actually send me the transaction hash and I could see that. Even if it took a little bit of time, it wouldn't in most cases, but even if it did, at least I could see. Whereas now, neither of us know. The money's not in his account. The money's not in my account.
Definitely.
At some point, we hope that it ends up. I mean, it's a mental scenario to be in the world that we're in today.
And that's one of the things that actually got me into crypto, because when I had my SME, I tried to buy something from China, and like on Alibaba, and I'd never purchased anything online. It took me 5 days of transaction to go through. It was all my savings at the time, which was like £3,000. Yeah, it cost me it was a £3,000 transaction. It cost me about £350 for the transaction to go through, and it left my account 5 days before they even got it. I've never been in a position like that before.
No, my brother recruits from the UK real estate brokers here. He used to live here, so he knows the market, and he complained to me the other day about how much money he's losing on transfers when people are sending money from here to here.
Ridiculous.
And I was like, stablecoins. He was like, how can I fix it? I was like, stablecoins.
Yeah.
The problem is, the companies he's working with don't have stablecoins.
Yeah.
So there's a big gap between where we are today and where we need to be. But anyway, look, we are massively over here. I think there's even people waiting to come in this podcast studio that we're sat in right now. So I guess we'll link in your newsletter in the description as well.
Okay.
But if people want to find you, I think I know one of the places you're going to tell them to find you. But
I'm just CryptoinsightUK across all social media channels, so X, YouTube, Instagram, TikTok. On there is only my Instagram, TikTok, and YouTube because that's my X banner, so it doesn't need to be on X.
You didn't need to put it on there.
But they're the places you can find me. I'm most active over on X, and I make a YouTube pretty much every day. I try not to do it on the weekend because I like to have some time
off.
I wouldn't call it time off just from not from creating.
I have seen you post on the weekend, so there must be some.
I'm always active on the weekend, especially on X, but that's why you shouldn't need to get on there. This guy's not even going on X, doesn't even go on X. Like, what the hell?
We'll have that conversation later. But well, thank you so much for coming on and sharing your insights. And genuinely, I know I've said this to you before, but your content is genuinely what people need to be looking at, and so I appreciate you putting it out there because it helps me, and I just hope other people also start following you and start learning from you as well.
No, I appreciate that. Thank you for having me on, and hopefully you can help a lot of people going forward. I had a lot of messages about needing to come here and trying to set up, so
yeah, we can definitely talk about that. Thank you so much.
Thanks.